So we'll dive in here. I'm going to show you how I approach the options market. And like Tony, I do a lot of fib, but we're going to take it one step further. And along with fib comes Elliott. And Elliott Wave and fib go together like peanut butter and jelly. So I'll show you how I kind of set up my options trades that way. We will have some fun. I am in a little bit of trouble right now. I'm on vacation at my wife's parents' place in Florida. We're doing family pictures on the beach in 40 minutes. I'm in trouble. So I'm going to move along in this a little bit. So I'll try to get us on schedule here, and we'll get moving. So we're going to be talking about live trades, guys. You've got to be prepared and admit and be comfortable with not only the capital that you have in your trading account, but each individual trade. It's about having accountability and realizing that any given trade can go wrong. Do you accept that risk, and are you comfortable with it, right? If you're not comfortable with the capital you have at risk in each trade, probably not going to see your trade through to completion, and that's when bad things start happening, right? Your winning trade becomes a bigger, your winning trade that doesn't quite go right, you take it off too soon. Your losing trade, you know how this goes, can become a much bigger losing trade. So you're going to get slapped around here when you first start trading in these markets. So just realize that this is a learning curve. You got to kind of take this in phases. And listen, I'm not a get-rich-quick guy. I like to work hard at this business. I love this business. I love working with charts. I love working with you guys, but I'm not in here telling you I can make you a millionaire by next month, okay? We all cool with that? All right. So let's roll. What are we going to do here today? Number one, we are going to talk about fib and Elliott. Okay, we're going to look at how to identify whether the market's in a trend or correction through the lens of Elliott and fib. I'm going to show you how options overlay very nicely, how I set up my option trades with Elliott and fib. I will show you how to spread the risk, okay, introducing option spreads. We will show you how to identify the beginning and ending points of coming market moves. So again, you can structure the ideal option trade around that. And by the way, let me ask you, how many of you guys in here are trading options pretty actively? Yes, no, thinking about it. I know enough to be dangerous. Kind of let me know where you guys are in options. And we have a lot of people in here. I love that. A lot of people. Okay, cool. Let me stop that right there. Drawing a line. How many of you guys are using fib like Tony was talking about, and how many of you guys are using Elliott? Yes, no, I know enough to be dangerous. I think it's voodoo. Wanting to learn more. I think it's pure evil and witchcraft. Like, let me know. I'll kind of watch those. Selling naked puts saved me. Well, there's nothing wrong with that, Mary. No, Elliott. Okay. All right, cool. Well, I have I understand there's a lot of objections to it, and my life's mission is to show you it's really not that hard, but we'll talk about that. So blah, blah, blah. More option structures to help you figure out, best option structures within a trending or corrective environment. Mary Jo, awesome. Elliott Wave and Fibs Daily. Cool. So this picture literally is like 2 hours old. We just took a walk on the beach. We're in Pompano, just north of Fort Lauderdale. So we took the kids for the walk. So that was just today. I still have this T-shirt on right now.
Hey, Todd, all I'm seeing is your trading analysis website.
Oh, really? Oh, shoot.
Yeah. You're probably just sharing the wrong screen.
Wrong screen. Is that better?
Yeah, that's good.
Okay, cool. Thank you very much. Why don't you guys tell me? Well, I guess that's fine. Thanks, Hubert. All right. So that's the wife, Trish. I got twin boys, Jake and Brody. They're almost 4. They are a handful. We love them, but they are driving us crazy. I guess that's what little boys do. A little bit about me. If you don't know me, I run tradinganalysis.com, my research business up there. I am an ex-Wall Street guy. I left in 2010 when I met my wife, Trish, and realized she could put up with me, and didn't want to work investment bank or hedge fund hours, so I went to work in this business, helping retail traders. I trade my own capital daily. I do CNBC. I've been doing it for about 8 or 9 years now, and they call on me to do the technicals. That's me on Fast Money. I've been on almost every show on CNBC, and my new latest part-time job is I'm a part owner in a craft distillery. There's a big bull market going on in craft distilling, so that's my part-time job as well. So kind of fun, keeps me busy. All I'll skip this, but basically we did get married at Trump National, and this is the best man, Jeff, crushing me in front of the president. Not the president at the time, but he knows all the bad stuff I've done in my life, because Jeff and I are certainly no angels, so hopefully he doesn't deport me. Anyway, so let's get into, that's who I am, just real quick. Let's talk about some mindset that's required to trade well, okay? Cavemen. Cavemen would have been terrible traders. So when they were walking around like behind a bush or going into a cave, they didn't know what was going to happen or what's behind that bush or inside that cave. So their survival instincts kicked up. And those survival instincts that came in were fear, adrenaline, and aggression. They got all pumped up, right? This is going to help them survive whatever threat could be around the corner. Of course, their minds weren't developed enough to really kind of reason through the situation and trade with strategy or work with strategy. So their survival instincts relied on emotion. This caveman mechanism that helped them survive thousands of years ago has not evolved in our minds. So when we face uncertainty, this survival mechanism back in the caveman years takes over. So there was a study that was done that was by Caltech neuroeconomists imaging brains who were making decisions based on uncertain futures or uncertain choices like trading. And what they found is our brains are quite literally, when faced with uncertain choices, like trying to predict the future, where the market's going, your brains physically shift the decision-making process back to a different part of the brain. And the more uncertain the decision was, with less than, with not as much information available to help you make the best choice, the more of an emotional decision it became. So what happens is, if you really don't have a lot in the line, okay, and it's just a pretty simple, you can think rationally, there's a lot of information to help make the best decision, that thought process happens up front in the brain. But as it gets more uncertain, it gets shifted back here to the limbic system, and that's where the emotions are generated. So when we're trading, quite literally, they've watched that thought process and the energy and the impulses get pushed back here where the emotions are generated. So quite literally, unless you realize it, you're trading like a caveman. So you got to develop your EQ, emotional intelligence, okay? And successful people can do this and quiet this caveman tendency, right? And there's a study that actually shows that people who have high EQ, which is emotional intelligence, make on average $28,000 more per year. So there's definitely ways to boost your EQ, which is your emotional intelligence. Most importantly, it's to have a backup plan if your plan A doesn't work. And if plan A doesn't work, learn from it, but quickly move on. All that means, guys, is don't go change your system. Don't beat yourself up. Don't think you're a loser if you put 1, 3, or 5 losing trades on. Okay? It's going to happen. You can't control the future. All you can do is use all the information that's available to you right now, make the best decision possible, and trade your plan to completion. That's what trading is, and that's how you trade with high EQ. So it took me a long time to finally develop my EQ. I am not a smart person, I promise. Very average. And I found this style of analysis that I'm putting in front of you here. Tony did a nice job introing it. I'm going to take it another level up here with Elliot, adding fib on top of Elliot. And this helped me develop my EQ. Because at the end of the day, guys, you got to realize this is just all trading is. It's just a big pit, 500 sweaty gorillas pushing each other around, reading the tape, reading the crowd emotion, and just trying to discount what's going to happen in the future. Don't make trading more complicated than it really is. This is the essence of trading boiled down. So it's a grand but imperfect pursuit of tracking collective human psychology, herd mentality that drives market prices in repeatable, fractal, identifiable forms. All right. Now, Elliot is a wonderful way to simply follow the crowd. See what the crowd mentality is, how it's driving prices. So a couple guys that, I'll introduce you to. Some have been mentors directly. Some have been indirect mentors. Number one, guy named Andrew Baptiste. He's a dear friend of mine. He was the global head of technical analysis for JP Morgan and Morgan Stanley Investment Banks. This is him actually with my boys, Jake and Brody. He's doesn't look like an investment banker, but he's a trip. He actually played in a reggae band for a while. He's awesome. So this is him talking about the wave principle. And let me just underline that. He's not, an analyst at the retail branch of JP. He's the global head of the investment bank for technical analysis. And he says the wave principle is a simple rule-based methodology It allows the trader to dissect the collective mindset of traders for defined, attractive, positive risk-reward trading. It's a game plan. Tudor Jones, you guys should know who this is. This guy's worth over $3 billion. He's donated $1.25 to charity. He's in Market Wizards, this book you guys all should have read as traders, basically saying Elliott allows you to structure favorable risk-reward trades. I attribute a lot of my own success to the Elliott Wave approach. And this is Tudor. He's one of the best living discretionary hedge fund managers out there. You guys ever saw this video? This video has been taken down on the internet. He's got a team of lawyers trying to strip this video from the internet, but it shows him positioning for the 87 crash based on Elliott and an overlay from 1929, comparing that to the 87 crash. So this guy made $100 million personally being short based on Elliott for 87 crash. And by the way, we just passed the 30-year anniversary in October of the 87 crash. One more kind of testimonial, Soros saying, Mr. Prechter, who I'll introduce you to here in a second, his reversal proved to be the crack that started the 87 avalanche. This is Soros saying Elliott was a big reason for the crash in 87. And here we are 30 years later. So that's Elliott, okay? And really what it is it's just a catalog of patterns. And these patterns are meant to give you context. Fib helps you figure out when these patterns are going to start and stop, and then it helps you structure your trades accordingly. Some say Elliott's too subjective, and that's unfortunate because those are the people who are just looking for formulaic A plus B equals C. You're going to make money every trade, and you don't have to make any decisions. Obviously, if you step back and think about it, does that make any sense? Is there a formula to printing money? No. A lot of people want to sell it to you, but guys, you just got to commit yourself. You got to take the bumps and bruises. You got to love this game, and you got to pursue it to its fullest. Okay? So some of the objections to Elliott, you put 10 analysts in the room, you get 10 different interpretations. False, 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 false. You get 10 guys who studied Elliott for 20 minutes, tried it, says, it didn't work, and then they complain about it. Come on, losers. It's curve fitting. It's hindsight, too subjective to be of any use. Good trading is subjective, guys. That's just the truth. You've got to make decisions with all the information that's available to figure out where the most likely path of the market is. It's just like life, right? There's no formula to success in life. You've got to be tough. You've got to take all the resources available to you, structure them in a game plan, and charge ahead. There's going to be mistakes. There's going to be failures. There's going to be victories. You just got to push ahead, okay? And that's what trading is. Don't make it harder than it needs to be. So let's kind of look at some of the patterns, classic patterns that you guys have all studied in the world of technical analysis. Triangles, head and shoulders, parallel channels, et cetera, et cetera, et cetera. You guys have all seen these patterns, right? They're just basically Elliott wave patterns, okay? You take the classic technicals, Elliott goes to another degree and assigns different values and expected lengths and durations for each of these patterns in the classic technical world, right? So going back to the objections of Elliott, if you're objecting to Elliott, basically you're objecting to traditional technical analysis, right? So that doesn't really make any sense, right? It just takes a little bit of time. But I promise if you dedicate yourself for several months studying it, it will change the way you look at charts forever. Okay, so let's kind of talk about some history, and then we'll circle back and get into the option side. I know this is about options, but I want to hit the Elliott wave side first, okay? So it actually goes back to Charles Dow, who's the grandfather of technical analysis, and in the Dow theory, he gave us 3 phases of a market trend, okay? Accumulation, widespread participation, and distribution. So there's 3 primary phases within an overall trend. Elliott took it to the next level and also gave values to the correction. So there's number 1, which is accumulation. There's your first correction, wave 2. There's your big breakout, which is widespread participation. There's your next correction, which is wave 4. And then the final and 5th phase is distribution. Now this Elliott wave, 5-wave move, you can look on a 60-minute chart or 15-minute chart or a 25-year chart. All different degrees of trend will show these Elliott wave patterns. Now, it's not going to look the exact same across all different time frames, but there are certain rules and guidelines that you would expect to be fulfilled. If we just skip right to the S&P, and I just captured this chart this afternoon for you, here's where I think we are, okay? We're looking at green 1, which is accumulation, pull back in wave 2, 2012, 13, 14, 15 was wave 3, pull back in 4, and we're now moving up in the distribution phase, and there's a whole wall of fib resistance from 2517 to 2950 in the S&P that I believe is going to give us that 20+% decline. And it's going to be completed wave 5, but this wave 5 will be within wave 3, which means it's not the end of the world. It's just going to be a wave 4 crash, and then we're going to go up and do a next higher degree 5. So that's the likely path over the next 5 years. Higher for another 200 to 300 points, down for about 800 to 1,000 S&P points, and then we should be able to move back up above 3,000. Okay, so I have a game plan for how I'm going to approach the S&P and how I'm going to approach the overall market. Is it going to be right? No, but I have a game plan. And when you have a game plan, you can minimize your losses, you can maximize your rewards, and you can really minimize the emotion, the caveman tendencies that's driving your trading. So let's get started. Trading. There's 2 ways to trade, okay? Directional versus correctional. Directional, you want to buy something and have it move up, or you want to short something and have it move down, okay? If you're trading futures, stocks, or forex, you have to be absolutely right in your assessment of the direction, but only trade in markets that are directionally trading. This is not the case when you start adding options over your trading. You can begin to make money when you're in a correctional environment and the market's going nowhere, okay? Markets spend a lot of time in that corrective environment. So you can buy options in direction, and you can sell options and be delta neutral, which is what they call it in correctional environments. So when you have an understanding, a context of where the market is, either directionally trading or correctionally trading, you know whether to be buying options or to be selling options, and it opens a whole new world. So these are all pretty standard option strategies that most of you guys will probably know. I'm not going to go over them, but if you want to be bullish, there's a bunch of different ways to express that bullish bias and get positive delta. And if you want to be bearish, there's a bunch of different ways to express that and be in short delta. But let's just talk about for a second, how many people out there, please don't break my heart, how many people are only buying options? Anybody? Anybody? Just only buying options? Be brave. Hopefully nobody, but all right, we have 1 brave soul. Oh, 2 brave souls, 3 brave souls, 4 brave souls. Oh, for good Lord. Okay, you scare me. Marianne, people ask me why Jones wants that video off the internet. I don't have time. I'll tell you the whole story another time, but it's pretty interesting. I actually got contacted by his lawyers. That was fun. I possess the video, but I won't put it out on the internet. Okay, so just buying a call option, okay? This is why buying calls scares me. You buy Goldman, it's at $208.50, right? So go ahead and let's buy some in-the-money calls, 207 half calls, trading for about $3.70, okay? If you buy 100 shares, it's going to cost you about 20 grand. If you buy 1 option contract, it's going to cost you about 3,700 bucks, obviously a bigger savings. You bought 100 shares, let's say it goes up a buck, 208.5 to 209.5, you make 96 bucks or 0.5% on your gain, right? So you made 96 bucks on like a $20,000 investment. If you buy the options though, it seems like a good deal, even if you buy an in-the-money call, we're buying the 207 half. Let's say we go out a month, okay? And let's say we put a theoretical value on this and the stock goes up $1. The stock goes up from 208 half to 209 half. If you factor this in, if you do a theoretical price of the stock going up a buck, your option contract's now worth $2.08. You bought it for $3.70 and now it's worth $2.08 after the stock goes up a buck. That sucks. So if you bought the option contract and Goldman goes up a buck, you lost 1,670 bucks. That's going to be rough, right? That's actually if you do 10 contracts. If you should be 167 if you did 1 contract, okay? But you lost money if it goes up $1. What you got to do is if you buy the call, it's at 208.5, you buy the 207, you got to overcome the premium that you paid, which is $3.75. So you don't make money until this thing gets above 211. That's a big move, right? So there's a lot of, it seems cool to buy option contracts, but you have a big hurdle to overcome at expiration to be profitable, right? So you got to spread the risk out, okay? We're not trying to buy options and make 500% options all the time, right? You've got to do it with spreads. And one of the safest ways to get involved in option trading is to do spreads. So here's your vertical spread. Long one option, short another, and the same underlying, same expiration. Your risk is 100% capped, so is your reward. It's the easiest and most popular way to begin trading options. Your theta, which is your time decay, is minimized, okay? If you just buy in options, the other thing that's working against you is you're losing a little bit of money every single day. That's your time decay. But if you do it in a spread, you minimize that time decay. And I love this picture of showing the ice melting below your feet because it's kind of ironic in that the polar bear obviously can swim, so it doesn't matter if he goes into the water, but you get the point. So let's take a look. I've got a live trade on right now on Facebook, and I'll show you how this kind of plays out. And I've got 20 minutes before I'm disowned from the family. All right, so this is my live account. My live trading account made some money today. If we go like this, go to Facebook. Let's go to this account. Okay, so I have two trades on. I have a 180. I'm long 5 of the 180 calls and short 5 of the 185s. That's a traditional 180, 185 call spread. Now, if we go over to the Analyze tab, let me just show you this. I'm going to only focus on the 180s and the 185s. So the 180s and 185s, long 180, short 185s. My theta is 22 cents a day. So I'm losing 22 cents a day by being long. But I'm also getting 184 deltas, which means if Facebook goes up $1, I'm going to make $184 per dollar. But it's cost me 22 cents. My profits will be capped out at 185. Now, if I were to just only hold the 180 call, okay, all of a sudden my theta went from 22 cents to $32 a day. Granted, I do have more deltas. I'll make, from 180 up to 355. I'll make more money if Facebook goes up. But this theta is really, really going to work against you. From paying 22 cents to $32, in 3 days you pay $100. That's a lot, okay? So when you add the spread back in, you are really minimizing the reward. Okay, you're minimizing the theta, capping the reward, but it's a much better way to trade, especially when you put it in the context of spreads, okay? When you have an objective, and I can teach you how to do all this Elliott and Fib, but this is a nice little Tesla chart coming out of wave 4, just looking for wave 5 move up, bunch of Fib. I'm looking to go from 305 up to 325 area. That's my trade. Okay, let's take a look at this. So we have Tesla. We're going to buy the calls. We're going to buy the 305 call. It's going to cost me $14 in premium. Okay, the max profit is infinite. I can lose at most the $1,460. That's how much I'm going to pay for one option contract. But if you look at the break even, if I'm trying to go from 305 to 325 up here, and I buy an at the money call, I don't make money until it's at 319, until it's up at my objective. Well, that sucks. That's not fun. So obviously we've got to do something different. So now, rather than just buying the 305, let's sell the 325. Okay, let's do it into a spread. Again, we're trying to go from here to here. We have a game plan. We're not trying to hit home runs. We're trying to go from wave 4 up to wave 5. So now the break even goes to $312. It was 319. Now it goes to 312. And my max loss is only 760 now. That's better. Now, as soon as we get up to 312, now I'll be in the money. So you focus on your break even and also your max loss. Okay? Better yet, guys, you could do something even better. Okay? Rather than buying one of the 305s and one of the 325s, oh, by the way, this actually just worked out perfectly. We went up to wave 5, held the wave 5 zone and backed away. You could even do this with a ratio, and this is something that is not applicable to everyone, and I have a ratio on right now, but if you want to press it, here's what you do. Rather than buying a 305, 325 call spread, you can sell 2 of the 325s. Buy one 305, sell 325s. Now your break even is all the way down at $305. But what's also going to change significantly is your theta is going to be way, way down. You're actually going to be making money. Okay, so the call buy is going to be $1,400. Call debit $760. Call ratio is only going to be $82. Okay, I don't have theta in here, and I should, but you will be making a little bit of money by doing a ratio. And the reason I would do a ratio, once you get into the Elliott wave, which I don't have the time to teach you a good working model, I would need a little bit, an hour or two to do that. You know that fourth waves are going to lead up to wave 5 and then get the sell-off. And that's exactly what happened. So you can press that bet and sell more options against that zone, up your theta, increase your chance of success. Okay. I have a, let me see, what ratio do I have on right now? In CVX, okay? I've got one in CVX, and this is a great example. I was wrong in the trade in CVX. It's not worked yet. Okay, so let me do this. If I can just type, oh my God, CVX. Okay, let's go to this account. So I bought, in CVX, I bought the 116, 121 call spread. Right now I'm up $13 on that trade. Down here, I bought a 116, 120. I bought 2 of the 116, sold 4 of the 120s. This one I'm up $57 because you'll notice the profit right here. I made $116 on the 120s that I'm short. I haven't been right. The market's trading at 116.50. Even though I really haven't been right, being that I did a call ratio, I'm wrong, and I've still made money on the trade. And that's by kind of putting the odds in your favor. So it's knowing when to buy, when to sell these options. And that's something that I can teach you to do. Could buy further out to reduce theta? Yeah, but also, Jason, it's a good question. When you're trading with Elliott, I know that I have an expected time duration of this wave 5. So if you go too far out, Jason, you buy 3 months out, you're not going to make as much money, right, by the market moving up. The shorter the options that you buy, the more likely, the shorter dated options, the more you're going to make, right? The more you're going to make. So I love doing those ratios against those wave 5 zones, so selling more, okay? All right. I am going to skip this one. Just a little wave 3 equals 1 little setup here, but basically a real simple way to do a debit spread is you just take the distance of the last trend wave, or impulse is what they call it, project it up. That 100% is going to be 974. So you're looking to capture this distance right here, and I can teach you guys how to do this. Okay. Now, selling options. We just talked about buying options. How about selling options? We talked about buying a pullback and then selling a call, buying a call, selling a call up to your fib and Elliott objective. You can also, to be bullish, sell puts rather than buying calls. You can sell a put, buy a put. That's another way to express your bullish bias. So the idea here, guys, is to find areas of fib support and resistance. And if you rather be an option seller, sell put spreads below support and sell call spreads above resistance. That's a wonderful way to trade. So it all depends on where the volatility is, whether you want to be buying options via call debit spreads and put debit spreads, or selling options via put credit spreads or call credit spreads. And it all depends on where the volatility is, okay? If vol is high, above the 50th percentile, you want to be leaning towards selling options. If it's below 50th percentile, you want to be buying them. Okay, Amazon's right here in the middle. So these are credit spreads, okay? I have a credit spread going on in Facebook and Apple right now. FB. Along with the 180, 195 call debit spread, I've also sold the 177 half, 175 put spreads. This guy, I'm making $6.23 a day in theta, which is your decay, but I'm also making $25 for every dollar that Facebook goes up. If I compare that against the call spread, I'm making $180 for every dollar goes up, but I'm also losing $1.84 a day. Okay, this one I'm making $6, and this one I'm losing $1.80. So there's benefits, okay? There's benefits to each. I also have a put spread on an Apple. I've got a 175, 170 put spread, 106 delta, making $3.49 a day. It doesn't seem like much, but when you have all your positions kind of making you a little bit of money in that theta, it tends to add up. Okay, so I'm going to kind of skip through that, just kind of some fluff in there, no problem. Now, I didn't talk about it yet, but we also can do sideways trades. Okay, when markets are trading correctionally, you can make money. And one of the good examples that I have right now is JP Morgan. A lot of the financials are pretty sideways. These are my Elliott wave charts. And I think JP is in a wave 4. And I think this wave 4 will last either to December 14th or through Christmas on the 26th. I think JP is going to kind of hang around the 100 region here. So this is a correctional trading environment. I don't think it's a directional trading environment. So in JP, and this is something that I will teach you in the class if you'd like to continue on with me, is butterflies. Okay, butterflies are non-directional way to approach the market. So I'm short 10 at the 100 and long 1 at 95 and 105. Okay, making some money here. And this guy basically, if you look at the P&L or look at the P&L graph in JP Morgan, as long as we're inside of this range here between 97 and 103, I'm going to make money. And the longer we stay in that range, the higher that purple level will get, the more money I make. If we're there on December 6th, I'll be up 626 bucks. Okay? So you just got to know when to buy options based on the wave count and when to sell options. And when you do that, you're significantly ahead of the crowd who are trading options but no idea of what the context is of the underlying market. Okay, this is just a fluff. Here's how cool we are kind of trade, GMCR. It was a really nice counter reversal against the wave 5 support. It did put the trade on, and it doesn't work all the time, but basically we bought options at 85 cents and went to $32. The stock got bought out, but it was against a very nice wave 5 support zone. I had customers in the trade. It was awesome. So if you bought an option contract for 85 bucks, it went to $3,200. So it doesn't happen all the time. Probably never happen again. But it was from a good Elliott and Fib support. And actually, that GMCR trade, it was the capital that I used to invest in the distillery. It can't happen all the time. Trust me. It's just kind of a fun trade to talk about. So guys, what we're trying to do is just kind of get you the context, figure out if you're in a trending market or a corrective market, define the boundaries for the trend and corrective market, figure out when to buy options, figure out when to sell options, and when it is time to be short those options in a non-directional delta neutral bias, make some money with the theta, be able to make money in more environments, not just trending markets, but more importantly, try to achieve consistency. Okay, we're not trying to hit the big elephant. We're not going big elephant hunting here. Big game hunting, we're trying to hit singles and doubles. That's the way that you trade consistently. For me, there was this period of enlightenment when I realized, damn, you don't need to know where the market's going next to make money. And it took me like 10 years to figure that out, but I finally got it. I was like, okay, all you need to do is trade with EQ, emotional intelligence, use the tools that are available to you, make the best decision possible, and then just simply put the best options trades out and let it play out. You don't need to stress about where the market's going in the future, okay? Offload some of the risk, lower the threshold of profitability by selling options that correspond to your Elliott and Fib objectives. These are call spreads. You have take profits, you have entries. It's basically a trade plan all wrapped into one. And just like Tony, I was listening to her, she's like, she's not a black box girl. I'm not either. I like using, kind of reading the tape, and Elliott and the catalog of patterns that it gives to me gives me the context to figure out the right way to trade. Now, the other thing that I didn't mention is I do trade a lot of Bitcoin with this stuff. We're not talking about options, but I've been crushing it in the Bitcoin market. Just so you know, I'm looking for take profit at 85.61 and 9,200 in Bitcoin. I've been trading Bitcoin. I bought my first Bitcoins at 330 bucks, and I still have about 15% of the position. So I trade in and out all the time. This stuff is wonderful in the Bitcoin market. Okay, and another one that you guys want to watch is Aetherium. I think Aetherium is breaking from a wave 4, heading up into $600 to $700 region. Okay, I got to get moving again. I hate to be quick on this, guys, but you don't want to piss off your in-laws, right? Because that's never a good idea. So, guys, if you want to continue on with me, I'm going to give you just a quick way. I've got a course that's packaged up like we all do. It's really, really awesome. It's called Optimizing Your Options with Elliott and Fib. I'm going to share with you my Elliott and Fib strategies to trade the most powerful option strategies, including debits, credits, iron condors, butterfly straddle strangles. Stop risking your valuable capital, taking those lousy setups, not trading without context, understanding if you're in a trend or correction, and how to put the right option strategies to work at the right time. Okay, so this is for people who like to do a little work, like to trade and really get inside the chart work, learn how to do it, and also structure the right option strategies. This is not going to have you on the yacht with the Wolf of Wall Street by March. This is an edge in the market, and this is for people who want to exploit that edge. This is for people who are decisive, okay, and can follow a plan. Now, you can be ADD like I am, okay? Elliott really helped me kind of get rid of that ADD tendency and kind of trade with EQ, emotional intelligence. So for me, it helped me reduce that click, 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 too much trading, okay? You've got to keep that brokerage bill down because those commissions as a retail trader will eat you alive. Trust me, I used to trade for a hedge fund, and the commissions we pay as institutional traders is nothing compared to what we have to pay as retail traders. You've got to get off the keyboard, guys, and only trade well. All right, so here we go. Optimize your options, trading Elliott and Fib. Tackle the key price patterns as identified by Elliott, best suited to option markets. Master the 4 tools of Fib price. Build Fib support and resistance zones to isolate entries with most profit potential. Fib time, and this is something I didn't get to talk about, but find the best options expirations by doing Fibonacci time analysis. Art of the trade, this is what I learned on the hedge fund, how to professionally manage your capital, your tiering system. I teach this in the class. Some people said this is worth the whole price of the class. You get the option strategy selection download guide, option strategy selection, and the position calculator. This ties into Art of the Trade. So I will show you how to calculate your appropriate position size based on your goals in the market. Really important. So here you go. If you're interested, it is tradinganalysis.com/options. Here's what you get. You get the old version. You get the new version. You get the Art of the Trade, option strategy position calculator, the option strategy selection guide, live trading that did happen in the past. It's recorded, okay? Live trading session number 2, it's recorded. Everything is packaged up on the web page, ready for you to view now. Easily worth over $1,000, guys, for the Black Friday. We're doing it for Fibonacci 161.8. We are going to close this guy out Sunday at midnight. So tradinganalysis.com/options. Here's some of the feedback in the class. How would you rate the quality of this class? Very high, high, no low marks. How likely are you to recommend to a friend from a scale of -100 to 100? 81. How would you rate the value of the money? Excellent, above average, no low marks. How likely to purchase again? All high marks. So this class crushed it, and I'm very, very proud to put it in front of you. If you're at all interested, I want you to buy it. Here's what it looks like. Here's the actual class. Optimizing your options. There's your download. There's your download. Live trading session. Live trading session. Live trading recap. I did a whole video, guys. There's some really good trades in there. I'll leave it as a secret what happens in there. Here's the actual content. Part 1, Part 2, slide download, more content, more content, more content, and more content. $161, you get all of that stuff, guys. I will give you information on what to do going forward, but I've got to get my butt moving. Guys, thank you, and I'm sorry to do such a rushed presentation, but it is tradinganalysis.com/options. I appreciate you guys spending time with us. I hope you learned something here from me, and if not, find one of the other talented presenters here and get after it, okay? Don't sit around and system surf, and find somebody that you resonate with, somebody that you trust, and just consume everything they have, okay? This is TG, heading to family pictures. Guys, have a great weekend. Thanks to TradeThirsty, Hubert, and Jeanette. I'll see you guys soon.
Thank you, Todd. Thank you. All right, his link is tradinganalysis.com/options, tradinganalysis.com/options.